Good night, I'm Krystal Hoyte. Thanks for joining me for this week's episode of In the Know, a one-on-one interview with Governor of the Central Bank, Dr. Kevin Greenidge, following the quarterly review of the economy. In this wide-ranging conversation, we discuss rising global and domestic inflationary pressures, a shifting policy environment with the recent tariff announcements by the US, the Caricom payment and settlement system, and so much more. Governor Greenidge, thank you for making time.
You're welcome, Krystal. Thanks.
Let's jump right in, starting with the current state of the Barbados economy.
Fittingly so, I just concluded the press conference and we've published our report online. And in general, the economy grew by 2.6% for the first quarter, which is slightly above our forecast, what we were expecting. But a very strong first quarter performance. All sectors did really well, but in particular tourism, very strong performance on tourism, even though in the UK market there was a bit of softening, and that reflected one of our major hotel being closed for renovation. But very strong broad-based performance across all sectors, and it's in the 15th quarter, which is strong performance. The fiscal, very strong performance on the fiscal. In fact, the surplus was sufficient that the government was able to repay some of the debt early, Series B, E, and D. I believe those are the ones. So persons got extra payments earlier, and that is consistent with our fiscal and BERT framework, where any surplus will go to some of it will have been paid down debt faster. And some of that surplus also went to accelerate one or two capital projects that were being slated for further this year. And those funds were prioritized for that purpose. We saw the debt coming down, the debt to GDP ratio further declining to 2.8% of GDP, just above 100% target. We kind of psychologically have in back of our mind, even though you know the world is moving in a different direction, but we continue our program to aim for that. Reserves, 3.4 billion, one of the highest we have on record, which in my view provides great buffer, especially in this heightened global uncertain environment.
You mentioned that Barbados has recorded 15 consecutive quarters of economic growth, yet many Barbadians say they aren't feeling the benefits in their daily lives. How do you explain this disconnect between the economic data and the public's lived experience?
First of all, I believe that you may get individual persons may say one or two, person will say, well, you ain't feeling it because prices are still high. And it takes a while for economic growth to trickle down or spread out, where I'm using, to benefit everyone. But overall, when you look at it, you see the evidence of this effect spreading to everyone. When you just drive through communities areas, you see more persons doing business. So of course they're able to start a business, more individuals opening shops, buying their goods. You need money, that's economic activity helping that. You see persons putting on a section of the house, starting those projects they wanted. Even saw it in the banking system. We have the lowest on record non-performing rate, just about 3 and something percent. That happens when people are finding wealth. So because they're getting the extra, the wealth is spreading, they're able to pay down those faster. And then the loan book is growing because when persons are getting better off, they borrow more to do the little projects they want to do, to expand the house, mortgage upgrade. So you are seeing it. But of course, in face of that, at the same time, prices remain high. Like I say, prices don't decline. We could talk about that. We could talk about the inflation rate. February it was down 0.3%, but that's February last year on February this year. But I like to look at the overall picture. It was up 0.9. So an inflation is a move, a growth. So even though you have some prices in some areas being lower because international oil prices, etc., were lower, generally is up. When we look at historical data, our inflation natural rate is 3%. Based on the fact that we tied to US, and US target 2% for their inflation rate. They target that. And because we're tied, we usually have a little buffer, shipping costs, etc., add to it, we import about 3%. That's our natural rate. So we're even lower than our natural rate. But yes, prices are high. And then, like I say, going back to your question, there is this beyond though. You just drive around the road, you see it happening, a spreading of the economic growth. Of course, it's not where what you want to be. To get true inclusive growth and development, you need to get even beyond that, the social programs to the vulnerable. It takes time to build out. As government get fiscal surpluses, it put it in there and it build it out. You see businesses starting. I start a business because now I feel a little better, so I can expand my business. I hire a few persons. Then those persons have income. They're able to feed their family, and maybe they're able to do things they didn't want to do. So it takes time, starting from the businesses, wholesale, retail, distribution. You see it around the place, and then it trickles to other persons. So I'm not going to say that price is not high and cost of is not high. It is high. We have always been a high price destination. Let's be real about that. Okay? But at the same time, there's been a slowing of the inflation. There'll be a growth of national income, which in my view continues to spread. And if it's the antidote, right? You know when events come on, you know it bursts at the seams. What's the first thing persons is cut out when things get rough? Those discretionary spending. But restaurants are overcrowded. So much so now the prices starting to rise across those areas. Events are bursting, you see, and people starting to now get out and enjoy. What I want persons to start to do now is to invest some of that. Start now to take off a little bit and buy some bonds, take off a little bit, start that renewable energy project, put some panels on your house and do things that you will see the wealth and you will build even more buffers individually so that when the next shock comes, and it will come, you are in a better position to survive and flourish.
Earlier, you mentioned the BERT program, launched in 2018 during a debt crisis, stabilizing public finances through IMF support via an extended fund facility. Two questions. Is this the end of our IMF program? And what can you say about BERT 3.0 in terms of key elements?
Right now, the IMF is on the ground, and we are doing the final fifth and final review of the second extended funds facility. Okay? So this will bring this engagement to an end. Barbados Current Recovery and Transformation Program started in July 2018. It was a 4-year program, but you always say it was a life document. The first program had basically 4 targets, 4 things it wanted to accomplish. We had to build back the reserves to a comfortable level. It was inadequate level reserves, so we wanted to build back because for us to continue to enjoy the benefits of the stability that a fixed exchange rate brings in a small country like Barbados, we need to have enough reserve on hand to meet not only daily and monthly transaction demand, but also when that shock comes, and it will come, you will know the reserves will run down because you have to import and buy things to help you survive. Whether it's a pandemic, it's medications, whether it's a hurricane, it's tools and equipment to rebuild, you have to have that buffer. Right now, we are at 34 weeks of import cover, and we have sufficient buffer for it, even though to me, more is better. But you must provide for that regular activity, etc. So the one was reserves, protecting the dollar. The next target was debt sustainability. The debt was 178 if you include the arrears, etc. It's now 102. Just before the pandemic, it came down to like 117 or so. So we reduced the debt tremendously, and that builds space so that when a shock hit you, you can borrow and fix. But it also give confidence to investors who's looking in on person and say, well, look, the government, Barbados, are unlikely to have debt issues because the debt is on a sustainable path. And the fourth tenet was providing an enabling environment for growth and through the various structural reforms, etc., that was achieved. So BERT 2018, in my view, achieved what it set out to do. But the world has always changed, it's very dynamic. And so come now the pandemic, it become a different environment. Instead of talking about globalization, we started talking about nearshoring. We start to talk about constraints to shipping and logistics. We start to talk about scarcity, even though they're not really scarcity, it's just a lot. We start to focus more on development financing and climate financing. You know about Bridgetown 3.0. Barbados became the champion lead for advocating for climate change and climate financing. We started to talk and argue that this short-term funding for developing countries doesn't work well. You need access. So the conversation shift, and you start to talk about building growth resilience. And really kind of the transformative part of the bird, the T in bird. You don't recover about transforming now. Now what about bird tree? What do you think bird tree shows? The environment has changed, right? Now it's a volatile, evolving environment. That's what they say. And when we was at the IMF Spring meeting the other day, one word dominated the platform. One word. You know what that is? Uncertainty. The main message of the IMF, what in the spring meetings was, get your homes in order. Countries need to focus on domestic frameworks, strengthening them, strengthening the fundamentals. Because they didn't say it this way, but nobody can kind of help you. You gotta help yourself. Everybody try to help themselves. Because everybody a potter. The countries that would normally give you some aid, trying to figure out what to move for this tariff, what I'm going to do. So nobody can take aid. Focus on your domestic frameworks and your policy frameworks and on building your buffers. But that's what we've been doing. What is our domestic framework? BERT. So now we have to revamp BERT. And it has to consider that we are operating in an environment of uncertainty. It has to consider now, how do we move from the growth we're having to more inclusive and development growth, elements of that. It has to deal with the issue of climate risk and finance and providing for that. It's still focused on growth, but it's a type of growth and how to get it going. So BERT 3.1 now must consider this new world where shocks are the norm and the norm is a shock.
In return, we're talking about external shocks. Stay with us. Governor Greenidge, last month, the US announced tariffs and shifted its trade posture. How concerned are you about the potential ripple effects on our economy? And are there any early indications or projections from the central bank regarding the economic impact of these tariffs?
You have to be very concerned because this is really uncharted territory. If you look at the IMF report, actually, the real, I think they went back and showed these tariffs, it's 100 years. We haven't had something like this in a long time. So we have to be very concerned. And the concern also comes because you're not sure about the nature, the size, or even you don't have evidence of how the economy has responded to such a shock before. So you have to be very vigilant. I published a paper online, Central Bank, trying to do an analysis of the likely impact. So there are two arms. There's the merchandise trade, rum, and whatever else we produce that will be impacted. Or that is very small, but it's very important because these are people's lives, etc. You might think that the tariffs, even though it's 10% for Barbados, won't impact these goods. It would, because if you take the simple case of rum, the rum is produced here, but we import the bottles, we import the covers, we import the printing material to print the labels, even the ink, and those will face a higher cost coming in, and they will either have to be absorbed by the producers or they will have to reflect on the prices going back out. But our major channel which you will get impact is through tourism. And tourism, because tourism depends on, is a luxury good, so to speak, for most people. It depends on your disposable income. So you're going to get those persons who, by global recession, if it happens, loss of jobs, or even higher global prices, meaning that they have to spend more on the basic things at home, may put off a vacation or go somewhere a little closer to home. Go to another state and get a hotel than come here. So you can get that effect. In our business, in terms of goods, we may lose probably 15, 16 million in export loss on goods itself baseline scenario. But that's a 0.2% of GDP. But it means loss for those in particular industries. That's a summation. In terms of tourism, the worst case severe scenario, which we say a 15-20% drop, you're going to get maybe 130 million lost revenue, 2 percentage point in GDP, which will move us from the 3 to 1, right? And so, like I say, it's without hindsight, the best we can do is monitor, continue to adjust, and be ready to move, and continue to plan. The other effect will be through the price component, where right now is in our favor in terms of a lot of prices have the inflation has slowed globally, and so we feel that. But if things pick up and prices, you saw OPEC, they've expanded their production, so that argues well for us as a all important country, that we will sort of see a slowing of inflationary pressures coming internationally, and that should continue to keep inflation at a low rate.
And I want to pivot here because some have argued that dollarization, adopting the US dollar as legal tender, would make transactions easier and more efficient for Barbados, particularly as many imports are already priced in US dollars. What is your perspective on the feasibility of this and even potential consequences?
Dollarization is another system that is an option, always an option. Fixed exchange rate, floating exchange rate, dollarization, always an option. But I think what is important for persons to understand in this discussion is what it means for them. And perhaps let me explain it as best as I can, as simple as I can. What does dollarization really mean? It means no more use of the Barbados dollar and the adoption of the US dollar as your tender, right? It means, first of all, now, of course, there's the law, the regulatory framework around it, etc. That can be fixed. But let me what it means for you and me, everyone. Central bank issue Barbados dollars. We have Barbados dollars up there. In fact, let me show you. Let me get here. It may got a dollar or two. There we go. This Barbados dollar is up there. All of us have money in the system. Legal tender, right? But bears in paper, right? And coins. I am talking about the one in the bank accounts, because there's no physical dollar attached to that. There's a transaction. When it comes out, then we give you a dollar, right? So the first thing you need to do as central bank is to withdraw all this money, the paper money, the notes and coins and cash in the system. First thing. So we ain't talking about deposits. We ain't talking about your savings account, your savings and those. We're talking about the physical cash, either in the tills of the bank or the bank reserves here, or that in circulation, right? So I can say to you, Krystal, you gotta bring this $100 bill back to me, because that's my liability, central bank, and I have to give you US dollars. That's the first thing that must happen. You understand that? So, how much are these out there right now? 4.4 billion. Now, Krystal, how much would I have to have in US to change that 4.4 billion? If you bring this $100 with me, what do you expect to get?
50 US.
50 US, right? Because the rate is 2 to 1. So if you expect to get 50 US, if I have $4.4 billion out there, how much US must I have at the central bank? 2.2 billion. Now you check the central bank last report, we have reserves of 3.4 billion Barbadian dollar equivalent. That's about 1.7 billion US. But not all of that is available for me to change it, because we've got something part called encumbrance. Only available is 1.2. Let me get my calculator, Krystal. Indulge me. 4.4, that's a billion Barbados dollars you got. And you divide it by 1.2. What do you get?
3.6.
3.6. So when you bring this $100 bill to me, how much money am I going to give you?
36.
$36.66. So we don't do a cent, so you get 36 US dollars. You were expecting how much?
50.
And how much you got?
36.
So you lost $14, right? Let me do it math. So about, excuse me, I can't count. 28%. You're 28% poor. Now you may be happy with that. Maybe everybody happy with being 28% poor. And therefore we can make that happen. But the price of the goods come in and get any cheaper. No. The ports coming in is the same US dollars. They still, the car gonna call the same amount. The rest of the ain't cutting their prices. So while you are poorer in terms of income, the prices are the same or even higher. So now you're getting double whammy. But it ain't stop there. Your debt that you owe ain't gonna change up. You still owe the people the money that you borrow from them. And so you can see that while theoretically is an option, viably, in my view, it's not an option. For it to become an option, we will have started that as part of our vision that over time we will convert to a level where you have 100% cover. But that's not how we are now. We've never been like that. We've always had what we call a fractional reserve system. I only need to have any governor, any central bank, we only need to have enough so that when you come, we can cover it. But if you want to talk about dollarization, it ain't got nothing to do how much the price is in or how much your imports US dollars. It has to do with what you use as your currency to settle.
We'll take a break here. Coming up, we're talking about regional trade. Governor Greenidge, the central banks of Barbados and the Bahamas successfully process a cross-border payment using their respective currencies, without the need for an intermediary currency. This is a significant trade breakthrough for the region. Tell me about the Caricom payment and settlement system.
This is a system based on similar to the Pan-African payment system. Also, there's a system just set up in Asia. These are systems whereby within a region, you're able to trade using your local currency as opposed to having to source a vehicular currency. What that means in English, a hard currency, the US dollar, right? So let me explain clearly how it works. If a person in Barbados, farmer in Barbados, wants to buy some bananas from one of our ECC or neighbors, say St. Lucia, currently the bananas are pricing, even though in solution dollars, ECCU dollars, they are priced, they will be quoted in US equivalent or even converted on the invoice. So the farmer in Barbados says $100 US dollars, bring $200 to his commercial bank and gets 100 US dollars, not in cash, but to wire, through a wire transfer. And that wire transfer goes from his commercial bank, that says a local RBT or CBC, some local bank, to a corresponding bank in the United States. Maybe one or two it passes through. Then it gets routed back to ECCB, to a commercial bank in the Eastern Caribbean area. And then it's converted to Eastern Caribbean dollars and going to his account. So you see this long process where you need US dollars at both ends. And of course, there's delays, that's time. And it's a cost because each intermediary can take off a little piece of their cost for the transaction. Introduce the Caricom payment system and payment settlement system. A network between the central banks, a payment platform. The farmer now goes to the commercial bank with his 200 Barbados dollars because that's the cost when you convert to ECCB, the Eastern Caribbean dollars. The farmer goes to the commercial bank upload it to the CATS payment system. CATS payment system recognizes that it is a transaction for St. Lucia. And within a few seconds, the money is paid to his account in ECCB dollars. So knowing a way around that, they did convert to US and reconvert. So one, time is shorter because a few minutes. And two, there's no intermediate fees happening. It goes one way, Barbados dollars, went in the bank, the system convert to ECCB. And once we get that going more in the region, it won't take very much for you to imagine, since it's built on the Pan-African payment system, that if we connect to the Pan-African payment system, now the whole African continent, we can do transactions. You can send money to Nigeria for business. We'll have to go through USA every instant, almost instantaneously. So now it becomes a facilitator for trade, and it can spur trade and growth. So to me, this is a very important development. We still have to test out to make sure the rules are consistent, what the implication in terms of governing. etc. But once working, this will definitely be a game changer.
Perfect place to end. Any final words?
Really, now is the time to unite, start together, invest, bet on yourself, and continue to forge and take even the Caricom relationship to the next level. That was my approach. That's what I'm saying.
Dr. Greenidge, thank you for making time.
Thank you very much.
And thank you for joining us.